Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And what is happening? This is a heck of a week. We're going to look at a couple things. Bear with me. I get what I'm about to say. We're going to look at two possible conspiracy theories and how it would affect the stock market. Yes, conspiracy theories. And is it going to keep dropping? Is it going to keep going? We have no idea. But we're going to take a look at it because I want you to have an open mind for this, especially you,
Well,
Vinny, because you're gonna
yep.
shut this down immediately. All right?
Dude, I'm on board. I love this is a conspiracy. I'm
This
pretty sure it's an earthquake tool being developed by Alibaba Corporation.
no. All right. So here's a spy. Right. This is utter. I mean, that's so fast. Let me
Yeah.
get to here. There you go. Look at this. I don't know. That's crazy. What is happening? Look at the volume.
Yeah.
I don't even have to move my face. You can still see the volume poking out right here. It's insane. Here's the cues, pretty much the same graph. Look at that sexy support and resistance, by the way. Ooh,
Yeah.
crazy.
So,
And
someone's added another group chat where people are talking about stocks, and I just responded with that Stanley Kubrick scene from The Shining where the elevator opens and the blood pours out.
yeah,
That's basically what the market
makes
looks like
sense.
right now.
So I actually did buy a small amount because I think it's going to drop a little bit more, but I did buy some things. I'll show you. But here's the weekly chart on the Nasdaq on the Qs. Honestly, we still have in my opinion, a little bit more ways to go. These 2 days have been crazy. I don't think we'll continue to fall like this. It's just like when you go super high, super fast, it's not really super sustainable. So we may
Yeah.
chop a little bit here, but yeah, weekly chart, man, insane.
That's the biggest bar on the chart. I was looking and I'm
Yeah,
like, that's the biggest one by far.
yeah, no, it is. It's absolutely insane. And last time we had a decent drop, it was just straight up from here. So no one knows what's going to happen. But we did do a video. I made this so then people can just like look at it, not have to watch the other video. We made a video on 5% free cash flow prices of certain stocks. We did here
Hmm.
in the videos right here. Let me move your face. There you
Yeah.
go. And then just like key levels of stocks as well. So actually, it's kind of funny if you look at these charts. Two or three of these are at the level. I'm not saying those are levels to buy. I just expected some hesitation around said levels. So it's
Yeah.
I have this in my back pocket in case we hit certain prices. Microsoft looks like it's definitely not even remotely close gonna hit, but Google, Meta actually may get there. So important to
Even
keep in mind.
Nvidia's not as far off as it would have seemed a few weeks ago.
I agree, but more importantly,
Yes.
let's get to the conspiracy here. Okay, so hear me out. I'm gonna make my face a little bit bigger and your face a little bit bigger. Okay,
Sure.
so we're in debt, right? And it's not good. It's frowned
No.
upon. We don't want to be this much in debt. So as of February 2025, the total public debt was about 29 trillion. Treasury bills making up 6.37 trillion. Treasury notes 14 trillion. Bonds making up about 5 trillion. According to the Treasury Borrowing Advisory Committee's most recently released quarterly refunding documents, approximately 33%. This is the important thing. 33% of U.S. publicly held marketable debt will be maturing, meaning we have to refinance because we do not have the money to pay it in the next 12 months. Okay?
Mhm.
Stay with me.
Okay.
Stay with me. Okay? About 9 trillion of this is a thing that's been going around on multiple channels on X, Twitter, whatever it's called.
I love it.
Yeah. So
Multiple
basically,
various
this is
forms.
debt, about 9 trillion worth. I was really upset that I couldn't find the actual source of this, but I actually put the source in that last slide. It is a government site for 33% of debt. That's not a conspiracy. I put it right here. Yeah.
Okay.
That's
I
that's
like it.
legit. That's actually happening. Apparently, a lot of it is going to be maturing by June.
Hmm.
Okay, not good because we don't have the money to pay this back. So what does that mean, Vinny? So the CBO's latest budget and economic outlook includes bad stuff. Okay, so net interest payments over the next 10 years will total $13.8 trillion. This is just interest.
Yeah.
Okay?
Yeah.
We're at $36 trillion in debt. Do the math on that, guys. That is not sustainable. That is fucking terrifying. Interest just for 2026 is going to hit $1 trillion. If you guys don't remember, we take in about $5 trillion-ish in income for the government through taxes. Yeah. So that's 20% just interest. Okay?
That's more than a defense budget.
Yeah, actually, that's the next. That one's down here. Yeah, that's down here actually. But net interest has been exploding over the past few years, with payments rising from $223 billion in 2015 to $345. We're going to be at $952, a near record 3.2% of the total GDP, and interest will eclipse its record as a share of the economy in 2026. Okay, so this is bad. All right, so here's where we get to these tariffs. Now, this is a really good chart just to visualize this. This is federal spending in billions. This is for 2026. Interest on debt will exceed $1 trillion. Look at that. Just federal spending in billions. We're past Medicare. We're past defense. We're past Medicaid. We're just under Social Security. Right? Now, this is like 2034. We're right here, but we're actually, I mean, it's still higher. So, boom. Not good, man. This is bad. This is very, very bad. So, JP Morgan said it now sees a 60% chance of the global economy entering a recession by year end. And the disruptive policies have been the biggest risk, yada, 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 supply chain disruption, all the usual keywords. What's happening? Here's what you do. Here's the conspiracy. You create a recession through a tariff trade war. Okay, so it's like, hey, was he just like throwing darts at a dartboard, drop all these tariffs, or is he trying to create global strife? Create a recession through a tariff trade war. Interest rates then have to lower while simultaneously, unfortunately, because of tariffs, inflation increases. So Jerome Powell is going to be put in a position where he's going to have to cut rates. This is a conspiracy. I'm not saying this is going to happen. Okay, debt then becomes refinanced at a much more affordable level. And interest rates will then probably have to increase again because this is not sustainable. Otherwise, we will never hit 2% inflation. We'll hit like 5. Okay? So the theory is he's doing all of this right out of the gate, super, super fast, because he's trying to crash as many things as possible because we have to lower interest rates. And unfortunately, inflation is not where it's supposed to be. So we can't just lower it just because we want to. So it's, do we create a really rough time for Americans right now and then be much better off in the next 10 years? Or do we just refinance the debt at an interest rate that we cannot support? Okay? How do you feel about this?
3-level chess stuff right there.
Yeah.
I mean, sure. In some way it does make sense. I don't know if I see it playing out that way though.
No idea.
You're going to see. So for one, my understanding is that interest rates on federal debt are really not per se set by the Federal Reserve. Sure, that underpins a lot of the interest rates in the U.S. society, but they're at auction for the Treasury notes, right? Mm-hmm. And we've already seen Treasury notes move significantly from the strife, never mind what the Federal Reserve does. So, rates were 4.5% of the 10-year not that long ago, a couple months ago. Now they're at like 4%.
You also, this is important, you also have a global economy that are less likely to buy Treasury notes bills.
Yeah.
Which then, who has to buy them? We have to print money. Okay? Now, hear me out. This one's worse. I'm going to set this aside. Okay? I got a bigger one.
Oh, God. All right.
Yeah.
That's impressive.
Yeah. I'm going to have to, bake a pizza or something. I can't just waste this tinfoil. Here's crude oil prices. Okay? They're not doing well. Spoiler alert. We dropped down to 62. Okay? So, what is happening? Well, like I said, JP Morgan increased the odds to 60%. Markets were therefore stunned when the OPEC, which produces 40% of the world's crude oil, along with the allies, which just makes it OPEC plus, they chose not only to go ahead with its previously held plans to increase oil production, but to triple the expected increase figure. So they know there's a supply issue. They have too much. But instead of doing what they usually do, they triple production.
I have no idea why on earth they would be doing this. Like,
That's a
I,
good question. We're going to talk about it because I have it right here. Why would they
okay,
do that?
okay.
So here's all the barrels they're doing, right? So why are they doing this? That's a great question, Vinny, because that is completely illogical.
Hmm.
One is that the group is very bullish on oil demand later in the year, putting it firmly in the minority, as investors' outlook sour and fears on a global slowdown. Okay? These members said the continuing healthy market fundamentals and the positive market outlook in their statement on Thursday, saying that this measure will provide an opportunity for their participating countries to accelerate their compensation. Another reason for the group's move has to do with another T word, Trump Daddy. Okay?
Oh God.
The man in the White House, who during his first term in office and from the very start of his second, has loudly demanded oil producer groups bring down prices for Americans.
Yeah.
But to triple production, this is not my area of stocks. I don't know oil stocks. That is completely illogical. I don't understand just by the laws of supply and demand what is happening, which is why I'm wearing this hat. And two, which is why I may buy some oil stocks here, because completely illogical move.
Yeah.
Maybe something's coming. I don't know.
Yeah, I saw that oil prices were crashing, but
Mm-hmm.
I thought it was on the increased risk of recession because, right, you don't need as
Mm-hmm.
much oil if the economy is not running at full speed. I did not realize that OPEC, that's how you say that, by the way, was increasing their
OPEC.
output in order to decrease, oil pressure prices at kind of Trump's discretion, if you will.
Triple.
Um, yeah, yeah, that's
Triple production.
well, yeah, triple the increase, not the overall production number
Right,
of.
yeah, sorry. That's important. I
But
shouldn't say triple
it's
production.
why would they do it? Because like they start producing oil at these lower prices, they're actually losing money per barrel in some of these kind of places. Depends on
Unless they're
how
stockpiling
efficient their
for
operation is,
an
but
for an event.
mm,
I don't know.
pretty
This is
fast.
not. I know nothing. I don't know what's happening. I don't know any of this stuff. Someone in the comments, maybe if you guys are more oil stock guys, I'm not. Um, it's freaking me out a little bit because anytime you see something, anytime you see like a divergence or something illogical happening, there's a much bigger game at play than people realize. I'll just leave it at that.
Yeah,
This could, maybe I'm just an idiot. I don't know what this means, but I'm gonna be buying some oil stocks here as these prices fall because I don't like this at all.
the OPEC thing is really throwing me, man. It,
Me
it,
too.
it reminds me of saying that if you're at a poker table and you can't figure out who the patsy is, you're it.
Mm-hmm. Yeah, I don't like it.
Yeah,
I don't like it at all.
I
I
don't
don't
like
know
it
what it
either.
means. That's why I got the bigger hat. See,
Yeah,
it's
yeah.
bigger, Vinny. Actually, that was a
It's so
smaller one.
big. Trump exempted it from tariffs.
Well, for now. All right, guys. Let us know what you think. And yeah, let us know what you guys are buying. This was an interesting week.
Yeah. Catch you next